The brick walls are there for a reason. The brick walls are not there to keep us out. The brick walls are there to give us a chance to show how badly we want something. Because the brick walls are there to stop the people who don't want it badly enough. They're there to stop the other people. Randy Pausch. My friends, the brick wall is not spending that 10 to 15 minutes a day. If you will do that, that wall will come down. 10 to 15 minutes a day is all we ask each and every day. This is the important thing about it, is that consistency. That's what tears the brick wall down. That consistency teaches you the nuances of the market so you can read these charts and see what's going on. Now, let's talk about what's going on. First is object lesson as to how important profit and loss bands are. I'm going to put the profit and loss band training at the end of today's video. Why? Because the hammer time we saw with gold rocketing down 2.26%. Those of you who set up your profit and loss bands, again, at a reasonable point, 2% down, 1% down, you were well out of goal before it rolled over and hammered down again against what we've seen in the past. Things happen. That's okay. If that happens, it happens. And look at gold. This is the weekly chart. It is crazy with a 2.25% down move. We'll just start with gold. I mean, we saw it cross over. We had a weak week last week, and then boom, just hammering down at the end of this week. Look at the 2-day chart. First day of the latest 2-day candle. Look at that. Now, we had seen things not work, roll over, down, sideways, and then boom on Thursday. We saw the derivative oscillator oscillating down, devolving, and then splashed over. We saw the 2-day heading down and then just dropped like a stone. Boom. Will there be perhaps a pull-up, a little rollback on Friday? There could be, or it could just keep going. Look at what the Bollinger Band did. It just stretched out for that long move down. So, not a good day at all for gold. Look at the half-day chart. We saw where after gold peaked, it rolled down strong for 2 days, then sideways for several days, popped up on Tuesday of this week, down Wednesday, and then Thursday, hammering off, and again, slowed that a little bit in the afternoon. Not as much as it could have been, but bad. So that's where we are with gold. Object lesson. Profit. You know, and for those of you who don't know what I'm talking about, who are new to the channel, don't know what profit and loss bands are about, well, I'm going to stick that at the end of today's video for you, and you can take that training. Be at the end of today's video. Just check it out. Okay, let's keep moving. We're going to now go to the S&P 500. It was down for the day. Q's was up, down just a little bit, 0.17%. And of course, we have a red down candle for the week. Little candle with a wick on the bottom. Solid red, price percent oscillator slowly pulling away from the red signal line. Derivative oscillator going red this week. One more day. Of course, we had that 2-day recross going down. Has served us well over the course of these last few days. Beautiful to see. And again, we'll continue to watch it, hopefully. Continue to head down. We see, again, on the 2-day chart, price percent oscillator, derivative oscillator, both heading down. We look at the half day, and of course, we can see where things bottomed. And this is just important to note on Tuesday. Moved up on Wednesday, lost a little bit on Thursday. So keep an eye on things, particularly that 2-day chart, particularly that weekly chart, but know where everything is. We have rolled up on that half day, and of course you can see where that movement has moved up through the weekly on the half day. So again, just pay attention, close attention to how things are developing. What about, and some of you may have already hit your profit in your profit bands and you've pulled that trade. Now you might say, Tom, how are you making a profit on the S&P 500 going down? It's called puts. We have a great training, Options Made Simple, the Charting Wealth Way, 3-part series available at any of our levels of Patreon support, any of the 3. I know the $100 level is full. There's some room at the $30 level, but those have been going fast. Again, if you will simply, take the trainings that we have. We offered earlier in the week the inverse funds. That is also another way. You have something called SH, which is a single inverse of the S&P 500. If you're interested in it, of course, you need to practice, trade it, and learn it, because there are special things about inverse funds that you need to know. They're called fees and revaluation, which happens on a daily basis. So again, you got to practice, trade it, see what it's about so you understand it. When you think you're getting good, then do a little fractional trading, see how that works, and learn. Okay, that is where we are on the S&P 500. NASDAQ 100 up 0.07%. Price percent oscillator, is it going to cross over going down? It has a little bit of a ways to go, but it could if there's a down day. It was up on Thursday. Derivative oscillator still losing momentum. Price percent oscillator is getting close to crossing. And what do we have for the week? You can see a little red spinning top. We'll go to the 2-day, and I screwed that vertical line up. We'll go ahead and put that in the right place. When I moved it around the weekly chart, you got to always make sure to reset it on the chart that you drew the line on. We see the derivative oscillator continuing to go negative, getting bigger as it devolves. And we see the price percent oscillator heading down, pulling away from the red signal line. We do have a green candle that is forming, solid green, little wick on top. That is a slowdown in the down movement. That's from the up movement on Thursday. What do we see on the half day? We can see where things bottomed in the NASDAQ 100 in the morning on Wednesday, popped up Wednesday afternoon. Not a lot going on. Well, I mean, a lot of movement back and forth on Thursday morning, then popping up Thursday afternoon. So again, keep an eye on all the charts all the time. We'll see what happens. Either we'll get a weekly vertical crossover, things will stay the same, maybe weekly vertical crossover at the end of next week. So just pay attention to it. Again, not super excited about a weekly vertical crossover going down, but again, it may occur, and I would encourage you to just watch, pay attention, and see what you see develop. Okay, we're now going to go to 20-year bonds, TLT. What do we see there? Down for the day, 0.46%. We have a green open box candle forming for the week. Price percent oscillator is about flat. Derivative oscillator positive, losing momentum. 2-day, still negative. We keep talking about one of two things is going to happen. Either the weekly is going to cross over going down, weekly vertical crossover. That 2-day is going to cross over going up. It was getting closer. And then, of course, down for the day on this latest candle. Red open box spinning top, slow down in the up movement, not hitting that higher high that we saw on that last 2-day candle representing Tuesday and Wednesday, the 14th and 15th of September. So we'll keep an eye on things. Derivative oscillator still just barely negative. And that half day shows us the intraday movement where things peaked back on the afternoon of Tuesday and then sort of started rolling over since then. Price percent oscillator still positive, headed down. Derivative oscillator positive, losing momentum. So we'll see how 20-year bonds finally shake it out. We've already talked about gold, shocking. And what do we see with Bitcoin? Down for the day, 0.64%. Now, of course, Bitcoin moving up after that weekly vertical crossover, moved up for 2-3 weeks on us. It really peaked out. Well, it actually peaked out during the week ending September the 10th with a high of 51,652. Now, prior to that, we saw it at 49,000. 807.47. And then as things have started moving over and down this week, solid red down candle, no wick on top, wick on the bottom, price percent oscillator flat, derivative oscillator losing momentum. 2-day chart, of course, that 2-day crossover occurred on Monday the 13th. That, of course, at the close of that should have taken you out if you had not taken profit sooner. What are we waiting for? Either a 2-day recross going back in the direction of the up move or the weekly crossing over going down. Let's take a look at the intraday action, and you can see where Bitcoin 2 strong days down, 1.5 days of decent movement up, and then sort of a sideways slide devolution on this latest Thursday. So that's where we are on our charts. Thank you again for your support. Keep an eye toward the close of the market on Friday for the cues. If you have a weekly vertical crossover going down, it could happen. Patreon members, I'm getting ready to finish the work on the 20 weekly vertical crossovers up and down. We always try to find 20. Sometimes, some weeks, they just aren't there. But we will be looking hard for those. We'll be sending you that email soon. If you're not a Patreon member, then you know what? Maybe a little reciprocity, a little good karma needs to come your way by supporting us here. We got lots of great benefits, including that 3-part series, Options Made Simple, The Charting Wealth Way, plus the monthly call-in session, first Wednesday of every month, 12:30 Eastern Daylight Time, live question and answer session. We review your questions, the stocks and ETFs you want us to help you chart for practice trading. Have a great time. And of course, all the special trainings and the 20 weekly vertical crossovers every week. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.